Have you ever wondered why some traders make it big in the stock market while others just lose their shirts? What if I told you that the key isn't just in the charts or indicators, but in the mindset and methods of the smartest traders who understand the market like a living, breathing organism? In this video, I'll break down Richard D. Wyckoff's My Secrets of Day Trading in Stocks, revealing timeless principles that can turn your trading from guesswork into a strategic game plan. So, if you're tired of feeling lost in the market and want to learn real tactics that stand the test of time, you can't afford to miss a second of this. Stick around, because this could be the moment your trading transforms. Let's dive in. And by the way, you're watching Book Loom, the channel where we turn the world's best trading books into clear, actionable strategies for you to master the market. If you're serious about learning and growing as a trader, make sure to subscribe and hit that bell icon. Chapter 1. The Foundation of Successful Trading. Let me ask you something. Why do so many people fail at trading, even after spending hours staring at charts and studying technical indicators? Is it because the market is rigged against them? Is it bad luck? Or is it something else entirely? In the very first chapter of My Secrets of Day Trading in Stocks, Richard D. Wyckoff sets the record straight. Success in trading has nothing to do with luck. It has everything to do with how you think, how you prepare, and how you act. Wyckoff believed and proved that trading is a skill that can be learned, but only if you approach it with the right mindset and strategy. Wyckoff starts by laying down a fundamental principle. The market is not a game of chance. It's a game of probabilities, and the only way to win is to understand the forces of supply and demand. He explains that the stock market is like a living organism. Prices don't just move up and down randomly. They move because of pressure, the buying and selling activity of thousands of traders. And the smart traders, the ones who consistently make money, are the ones who learn to read the signs, to recognize when demand is stronger than supply and when supply is overwhelming demand. Wyckoff emphasizes that before you even think about making a trade, you must understand the basic structure of the market. Are you in an uptrend, a downtrend, or a sideways market? What are the major stocks doing? What are the big players, the composite operators, doing? Wyckoff says you must learn to see the market like a chessboard, with every piece moving for a reason. If you jump into a trade without knowing the bigger picture, you're setting yourself up for failure. But here's the part that really hits home. Your mental state is just as important as your technical skills. Wyckoff warns that most traders fail because they let emotions, fear, greed, excitement, control their decisions. They get caught up in the thrill of a winning streak or the panic of a losing trade, and they abandon their plan. The pros? They stay disciplined. They understand that trading is a business, not a gamble. Wyckoff teaches that you must treat every trade as a calculated risk, never a sure thing. That means setting clear entry points, stop losses, and profit targets before you click that buy or sell button. If you're not prepared to do this, you have no business trading. Another key point Wyckoff makes is about knowledge. He believed that the majority of traders are either uninformed or misinformed, and that's why they lose. To win, you need to study the market every day, track patterns, understand how volume and price interact, and build a mental database of how the market behaves in different situations. In short, the foundation of successful trading is built on 3 pillars. 1. Understanding market structure and trends. 2. Mastering your emotions and staying disciplined. 3. Committing to lifelong learning and preparation. This chapter is like a wake-up call. Wyckoff is saying, if you want to succeed in trading, you need to stop chasing hot tips and start building a solid strategic approach. Otherwise, you'll be just another player in the market's game, a game that's designed to take money from the many and give it to the few who are prepared. Curious question for the next chapter. But here's the million-dollar question. If the market is like a giant living organism, how do you actually read its signals in real time? Wyckoff believed the answer lies in a powerful tool called tape reading. In the next chapter, we'll uncover how to decode the market's heartbeat through the tape, and how you can use this skill to spot exactly when the big players are buying or selling. Don't miss it, because this could change the way you trade forever. Chapter 2. The Power of Tape Reading. Let me ask you a simple question. If you could read the mind of the market, see exactly what the big players are doing in real time, wouldn't that give you an incredible edge in your trading? Well, that's exactly what Richard D. Wyckoff believed you could do. In this chapter, he unlocks one of his greatest secrets, tape reading, a skill that can turn an average trader into a market detective, someone who can track the footsteps of smart money and trade in sync with the market's real movements. Now, let's be honest. When most people hear the term tape reading, they think it's some outdated old-school technique from the early 1900s. But Wyckoff makes it clear. Tape reading isn't about looking at a ticker tape. It's about reading the flow of buying and selling in the market. It's about interpreting price and volume action in real time to understand who's in control, the buyers or the sellers. Here's the core idea. The market speaks a language, and tape reading is how you listen to it. Every trade that happens, every price uptick or downtick, every burst of volume, it's like a pulse, a signal telling you something about the market's internal dynamics. And if you pay attention, you can spot when the big operators are quietly accumulating stock or unloading it into the hands of unsuspecting traders. Wyckoff explains that tape reading isn't about predicting what the market might do. It's about understanding what the market is doing right now. For example, imagine watching the tape and seeing a sudden surge of volume as the price breaks a key level. That's not random. That's a clue. Someone big is making a move, and you need to decide, are you going to follow their lead or get left behind? One of Wyckoff's most powerful insights is that tape reading helps you separate real demand from fake demand. Think about it. Sometimes the market looks strong, but it's just noise. Other times, there's a quiet accumulation happening before a big breakout. Tape reading helps you spot the difference. Wyckoff also teaches that tape reading requires constant focus. You have to stay in the moment. The tape gives you immediate feedback. If you see prices rising on strong volume, that's bullish. If prices rise but volume fades, that's a warning sign. You must learn to think like a detective, asking questions like, who's buying and why? Are they buying aggressively, or is there hesitation? Are the big players absorbing supply, or is demand drying up? This chapter is like a masterclass in market psychology. Wyckoff teaches that every tick on the tape is a clue, and successful traders are the ones who put the clues together to form a clear picture of what's happening beneath the surface. But here's the truth. Wyckoff doesn't sugarcoat. Tape reading isn't easy. It takes practice, patience, and a deep understanding of price behavior. You have to train your eyes to recognize the subtle shifts in buying and selling pressure. It's like learning to read between the lines of a story the market is telling in real time. So, if you're serious about trading, Wyckoff's message is clear. Don't just trade based on indicators. Learn to read the market itself, because when you can see what the big players are doing, you can stop chasing after random trades and start making moves with purpose. Curious question for the next chapter. But here's a question that's been bugging traders for decades. Once you've mastered the art of reading the tape, how do you know the perfect moment to enter and exit a trade? In the next chapter, Wyckoff reveals the secrets of timing your trades, and it's not what you think. Get ready to discover how patience and precision can make or break your success in the markets. Don't miss it. Chapter 3. Timing your trades. Let me ask you something. Have you ever felt like you picked the right stock, but the wrong time to trade it? Maybe you bought too early and watched it dip, or sold too soon and missed the real move. Wyckoff knew this feeling all too well, and in this chapter, he reveals the truth. In trading, it's not just what you buy or sell, it's when you do it that makes all the difference. This chapter, Timing Your Trades, is like a blueprint for every trader who's ever asked, how do I know when it's the right time to pull the trigger? Wyckoff starts by explaining that timing is all about waiting for the market to give you a clear signal. He compares trading to hunting. You don't just fire at every sound in the bushes. You wait for the right shot, the moment when the market shows its hand. And here's the golden rule. Patience is the key to great timing. Most traders lose money because they rush in. They see a stock moving and jump in out of fear of missing out. But Wyckoff warns, the market doesn't reward impulsive traders. It rewards those who wait for the right setup. So, how do you know when the timing is right? Wyckoff gives us a roadmap. Look for confirmation. Don't just rely on price movement. Watch volume, price action, and the tape together. If you see a breakout on strong volume, that's a green light. Wait for tests and reactions. Wyckoff teaches that after a move, the market often tests its strength. If prices pull back on low volume and then bounce, that's a sign the uptrend is strong. But if prices pull back on high volume, it could signal the trend is about to reverse. Follow the leaders. Wyckoff says to focus on the strongest stocks in the strongest sectors. These leaders give you the clearest signals when timing your trades. One of the most powerful concepts Wyckoff introduces is the idea of the danger zone. He warns that traders often get trapped when they enter trades too early, before the market confirms its direction. They get excited by a breakout, but it turns out to be a false move, and they end up losing money. Wyckoff says, don't guess. Wait for confirmation. Let the market tell you when it's safe to enter. And here's the kicker. Sometimes the best trade is no trade at all. Wyckoff teaches that sitting on the sidelines, waiting patiently for the right timing, is just as important as placing a winning trade. Great traders don't trade all the time. They trade when the odds are in their favor. This chapter is a masterclass in discipline. Wyckoff challenges you to ask yourself, are you willing to wait for the right moment, or will you let impatience cost you money? Because at the end of the day, timing isn't about predicting the future. It's about responding to what the market is showing you, right now, in real time. Curious question for the next chapter. But here's the big question that most traders never think to ask. Once you've learned to time your trades, how much should you risk on each trade? In the next chapter, Wyckoff shares the secrets of money management, the invisible force that separates amateurs from professionals. Get ready to discover how much to risk, when to step on the gas, and when to hold back, because this could be the difference between staying in the game or blowing up your account. Don't miss it. Chapter 4. Managing Risk Like a Pro. Let me hit you with a cold, hard truth. You can have the best strategy, perfect timing, and pick all the right stocks, but if you don't manage your risk, you're finished. Game over. That's the brutal reality Wyckoff teaches in this chapter. You see, most traders focus on how much they can make, but the real professionals, they focus on how much they could lose and how to make sure that loss doesn't wipe them out. That's what separates the winners from the losers. Wyckoff opens this chapter with a powerful principle. Protect your capital at all costs. He explains that every trader's first duty is not to make a fortune, it's to stay in the game. Because if you blow up your account, you're out. You can't trade tomorrow. So how do you protect your capital? Let's break down Wyckoff's rules for managing risk like a pro. Rule 1. Never risk more than you can afford to lose. Wyckoff says you should always set a maximum loss per trade. He suggests risking only a small percentage of your capital, typically 1% or 2%, on any single trade. Why? Because even if you lose, you're still in the game. It's all about survival first, profit second. Rule 2. Use stop-loss orders, period. Wyckoff is crystal clear on this. Never, ever trade without a stop. A stop-loss isn't just a safety net, it's your lifeline. It protects you from emotional decision-making when a trade goes south. He even warns that ignoring stops is how most traders blow up. The key is to set your stop at a logical level, where the market will tell you if you're wrong. Not too tight, not too loose. Rule 3. Don't overtrade. Here's where Wyckoff really hits home. Too many traders get greedy. They see a few wins and think they're invincible. So they start risking more, taking bigger positions. And guess what? One bad trade wipes out weeks of gains. Wyckoff's solution? Keep your position sizes consistent. Don't increase your risk just because you feel confident. Let the market prove itself first. Rule 4. Respect the market. Wyckoff warns that the market is bigger than you, me, or any trader out there. If you think you can beat the market, you're wrong. The market is a giant ocean. You're just a swimmer in it. Your job is to ride the waves, not fight them. That means cutting your losses quickly when the market moves against you. Rule 5. Let your winners run. Wyckoff teaches that while managing risk is about limiting losses, it's also about maximizing gains. If you've done the work, read the tape, timed your trade right, don't sell too early. Protect your gains, yes, but don't choke your winners. Ride the trend until the market tells you otherwise. This chapter is a wake-up call. Wyckoff doesn't sugarcoat it. Trading isn't about being right all the time. It's about making sure your losses are small and your winners are big. It's about playing defense just as much as offense. It's about survival, so you can be in the game for the next opportunity. So let me ask you, are you managing your risk like a pro, or gambling with your hard-earned money? Because if you're not controlling your risk, it's not a question of if you'll blow up, it's when. Curious question for the next chapter. But here's the big question every trader faces. Once you've mastered risk management, how do you decide what stocks to trade in the first place? In the next chapter, Wyckoff reveals his method for selecting the right stocks at the right time, the ones with real profit potential. You'll learn how to spot the leaders, the laggards, and the hidden gems most traders overlook. Don't miss it. It could change the way you trade forever. Chapter 5. The Psychology of a Trader. Here's a question for you. What's the single biggest factor that separates winning traders from losing ones? Is it the strategy, the money, the knowledge? Surprisingly, none of these alone. The truth Wyckoff reveals in this chapter is simple but powerful. Trading success is 80% psychological. Yes, the battle that determines your fate in the markets isn't just on the charts, it's inside your own mind. Wyckoff starts by explaining that the markets are like a mirror reflecting your emotions back at you. Fear, greed, hope, and panic. And if you don't learn to control your emotions, they will control your trades. The psychology of trading isn't just about avoiding mistakes. It's about understanding how your mind reacts under pressure and training yourself to respond rationally instead of emotionally. Because, Wyckoff says, the market will test you, over and over. Key psychological challenges. Wyckoff highlights, checkmark, fear of losing. Fear is the trader's greatest enemy. It causes hesitation and second-guessing. You might see a great trade setup, but hesitate to pull the trigger, missing your chance. Or worse, you hold on to losing trades hoping they'll turn around, only to watch losses grow. Greed and overconfidence. On the flip side, greed makes traders reckless. A few wins can create a dangerous overconfidence, pushing traders to risk more than they should, chasing profits and ignoring risk. Wyckoff warns that greed blinds you from reality and leads to costly mistakes. Hope and denial. Wyckoff describes how hope can trap traders in losing positions. Instead of accepting a loss and moving on, traders cling to hope that the market will reverse. This denial leads to bigger losses. Impatience. In a fast-moving market, patience is a virtue, and a rare one. Many traders give in to impatience, entering trades too early or exiting too soon. Wyckoff stresses that patience is critical for waiting on the market's real signals. How to master your trading psychology. Wyckoff offers some timeless advice. Discipline and routine. Set rules for your trades and stick to them no matter what. The discipline to follow your plan is your mental armor. Emotional awareness. Learn to recognize your emotional state. Are you trading out of fear or greed? Awareness helps you take a step back. Mental preparation. Wyckoff suggests visualization and mental rehearsal. Imagine scenarios, both wins and losses, so you're ready for whatever the market throws at you. Accept losses. Understand that losses are part of the game. Don't fear them, manage them. When you accept losses gracefully, you protect your mental and financial capital. Why does psychology matter more than strategy? Wyckoff reminds us, the best strategy will fail if your mind can't handle the pressure. You could have the most brilliant trading system in the world, but if you panic during a losing streak or chase profits out of greed, your account will suffer. The takeaway: mastering your own mind is the ultimate edge in trading. Wyckoff challenges you to be brutally honest with yourself. Can you stay calm when the market moves against you? Can you cut losses quickly without hesitation? Can you resist the temptation to overtrade? If you answer no or I'm not sure, you're not alone. Even the greatest traders wrestle with these emotions every day. But the difference is they recognize it and train themselves to stay in control. Curious question for the next chapter. Here's the burning question that most traders never ask but must. How do you combine all these lessons, timing, risk management, and psychology, into a complete, repeatable trading system? In the next chapter, Wyckoff reveals his secret formula for building a winning trading plan, a step-by-step guide to putting it all together so you can trade with confidence and consistency. Trust me, you don't want to miss this. Chapter 6. The Path to Consistent Profits. Welcome to the final chapter, the moment where all the pieces come together. Wyckoff doesn't just want you to trade and hope for the best. He wants you to build a system that delivers consistent profits, day after day, month after month. But what does consistent profits really mean? And how do you achieve it? That's what this chapter is all about. Wyckoff starts by reminding us that consistent profits don't come from luck or wild guesses. They come from a disciplined approach rooted in the principles he's taught you throughout this book. Reading the market like a pro. Timing your trades carefully. Managing risk like a seasoned expert. Mastering your own psychology. The core of consistency. A trading system. Wyckoff reveals that the real secret to consistent profits is to develop your own trading system, a clear, repeatable method that removes guesswork and emotional decisions from the equation. Your system should include clear entry and exit rules based on market signals, strict risk management guidelines to protect your capital, rules to keep your emotions in check, a method for analyzing which stocks are worth trading. This system isn't static. Wyckoff emphasizes that you need to adapt and refine your system as the market changes, but the foundation must always be strong. The importance of patience and persistence. Wyckoff warns that many traders quit too soon. They expect instant riches and get frustrated by setbacks. The truth? Consistency is a marathon, not a sprint. Success comes from small, steady gains compounded over time, not from hitting it big in one trade. He urges traders to be patient and stick to their system, even when the market tests their resolve. Record keeping, your trading diary. One of Wyckoff's top recommendations is keeping a detailed trading journal. Write down every trade you make, why you entered, why you exited, your emotions, your mistakes, and your wins. Review your journal regularly to identify patterns, both good and bad. This is how you improve. Mental and physical fitness. Wyckoff also highlights a lesser-known but critical part of consistent trading success: your mental and physical health. Stress, fatigue, and distractions can cloud your judgment and lead to costly errors. He advises traders to take care of their bodies and minds, get enough sleep, eat well, exercise, and practice mindfulness. Your trading performance depends on it. Final suggestions to move ahead. Wyckoff closes the book with powerful advice for anyone serious about succeeding in trading and in life. 1. Commit to lifelong learning. The market never stops evolving. so neither should you. Keep studying, practicing, and refining your skills. 2. Treat trading like a business. Plan your trades, manage your money carefully, and always prepare for the unexpected. 3. Stay humble and disciplined. Ego kills traders. Stay humble, follow your system, and accept losses as lessons. 4. Surround yourself with support. Find mentors, join trading communities, and learn from others who have walked the path. 5. Balance trading with life. Don't let trading consume you. Keep your relationships, hobbies, and health strong. They all feed your success. The takeaway. Wyckoff's final message is clear. Consistent profits are achievable, but only through discipline, patience, and smart trading systems. If you take his secrets seriously, stay committed, and apply what you've learned, you're setting yourself up for a lifetime of opportunity, not just in trading, but in any endeavor you choose. Wrapping up. Now that you've learned the full journey, from foundational knowledge, tape reading, timing, risk, psychology, to building a system, ask yourself, are you ready to take control of your trading future and turn these secrets into real, lasting profits? If yes, then start today. Create your plan, manage your risk, master your mind, and above all, keep learning and growing. Thank you for watching this detailed summary on Book Loom. If you found this helpful, like, share, and subscribe for more powerful book summaries that can change your life and trading forever. And that's a wrap on My Secrets of Day Trading in Stocks, a timeless guide packed with proven strategies, sharp insights, and powerful lessons to help you become a confident, disciplined, and consistent trader. Remember, trading isn't just about making quick money. It's about mastering your mind, managing risk, and developing a system that works for you in any market condition. If you apply these principles with patience and dedication, you'll be well on your way to turning trading into a sustainable and profitable journey. Now, I want to hear from you. What audiobook should we dive into next here on Book Loom? Drop your suggestions in the comments, and don't forget to like and subscribe for more eye-opening book summaries that empower your life and trading success. Stay curious, stay hungry, and keep growing.